The data pulled directly from CME servers today is not a glitch, not noise, but a historic market event unfolding in real time. What we are witnessing right now fundamentally alters the structure of the global silver market and cannot be ignored or minimized. For 48 hours, we warned that the China export ban would fracture supply chains and trap banks on the wrong side. We warned the physical market was breaking away from paper pricing. And today, that divorce became permanent and undeniable. What happened at 2:30 Eastern Time today exceeded every warning we issued over the last several months. The ghost of 1980 has returned to the trading floor with force and intent that mirrors the Hunt brothers' era. This is a physical grab for metal not seen in more than 4 decades of modern commodity trading. I am John A.G. from Currency Archive, and I am staring directly at the CME Group delivery report right now. The raw numbers do not lie, and today they are screaming panic from inside the system itself. On Friday, January 2nd, the exchange issued 1,168 delivery notices in a single session. That equals 5,840,000 ounces of silver, demanded immediately without hesitation. When combined with yesterday August New Year S-Day surge, the total contracts standing for delivery reached 3,446. Say that number slowly and visualize the sheer mass of physical silver being pulled off the exchange. 3,446 contracts multiplied by 5,000 ounces each equals over 17 million ounces. 17,230,000 ounces moved in just 48 hours at the start of the year. The global mining industry produces roughly 800 million ounces annually, which puts this event into terrifying perspective. In 2 days, the exchange was forced to deliver over 2% of annual global production. This is not industrial demand because factories do not place 17 million-ounce orders on Friday afternoons. This is a coordinated run on the exchange vaults, executed with precision and urgency. The timing matters because January 2nd marks the activation of China's export ban. The supply wall from the east has been sealed, and New York sharks know it. They understand the 39 million ounces in registered vaults are the last easily accessible supply. Once those ounces are gone, the price becomes no offer, and the paper market collapses. They did not test the waters, they smashed the buy button and demanded immediate delivery. Nearly half of registered inventory vanished in just 2 days under extreme pressure. If this pace continues another 48 hours, the exchange mathematically fails. This is inventory liquidation disguised as a routine trading session. The most disturbing aspect is intent, not volume, behind these transactions. In 1982, brothers attempted a corner. Today, the banks themselves are doing it. This signals the end of the silver suppression cartel operating for 4 decades. The truce between bullion banks has collapsed into cannibalization and survival instincts. Banks are no longer cooperating. They are eating each other to secure lifeboats. Issuer and stopper data reveals a brutal war behind closed vault doors. Normally, silver circulates between banks without leaving vaults in a paper shuffle. Today, the shuffle stopped, and the metal moved in a straight line. One major institution was forced to vomit millions of ounces it desperately needed. Another former ally caught every ounce and locked it away. This is what happens when a currency system begins to die. Theft turns inward, and predators turn on their own. There are no gentlemen left on Wall Street, only hunters and prey. The victim today lost over 3 million ounces in a single session. The buyer swallowed nearly 80% of market flow like a blue whale. The largest buyer was not retail investors or coin shops. It was the same bank that built the paper short position. They flipped sides and weaponized physical ownership against competitors. While banks feast in wholesale markets, the retail public faces total blackout. Bullion dealer websites are empty, and buy buttons have vanished. SD Bullion shows American Silver Eagles completely out of stock with March restocking estimates. The U.S. Mint cannot source silver blanks because wholesale bars were consumed. Kitco has closed orders, entirely refusing even profitable back orders. Dealers shutting order books signals fear of sourcing metal at any price. APMEX still has inventory, but at nearly $90 per ounce. Spot trades at $71, while retail pays an $18 premium. Wholesale discounts have become retail taxes overnight. Banks fenced off cheap silver and left scraps for the public. Premiums are exploding due to replacement cost panic. Dealers know wholesale supply will be higher priced or unavailable tomorrow. The chain reaction is complete, from exchange raid to retail collapse. Generic rounds and junk silver now trade at massive premiums. There is no cheap silver left anywhere in the market. Paper charts are irrelevant when physical inventory is gone. Vault data confirms the registered inventory is hemorrhaging. Registered silver crashed to 39.4 million ounces tonight. Nearly 3 million ounces were withdrawn in a single day. The metal was not recycled. It was removed permanently. At current burn rates, the exchange has less than 3 days left. Shanghai inventories are draining simultaneously at catastrophic speed. 46 metric tons vanished in one Chinese trading session. At that rate, Shanghai runs dry in 2 weeks. Global visible stockpiles shrink faster than mines can replenish. The world is running a daily silver deficit that cannot be sustained. This proves the crisis is physical, not speculative. JP Morgan spent $314 million securing metal. That amount represents only 0.02% of bank capital. Financially, the raid was trivial, but strategically, it was critical. Banks have infinite dollars, but finite silver. They are converting paper into atoms before repricing explodes. This is not about solvency. It is about availability. Banks are front-running inevitable revaluation, while others hesitate. The war is now bank versus bank for survival. The spot price is a deception tool masking physical collapse. Inventory data tells the real story, not charts or statements. 17 million ounces moved. Retail shut down. Vaults drained. This is not a drill and not a theory anymore. The silver scenario is live and irreversible. Physics now controls the market, not contracts. Possession determines winners as supply evaporates. Waiting for dips ensures missing remaining inventory. Do not watch prices. Watch vaults empty. Hold physical, reject paper. The war has begun, and this is only the opening shot.